Picture this, you're at a fancy dinner party and someone mentions the stock market. You nod politely, but inside you're thinking, stocks? Aren't those for the Wall Street wizards in pinstripe suits? Well, buckle up, because I'm here to tell you that investing in stocks is as approachable as your grandma's apple pie recipe. Stocks aren't some mystical financial sorcery reserved for the elite. Nope. They're just shares of ownership in a company. Imagine owning a tiny piece of your favorite pizza joint. Every time they sell a slice, you get a tiny crumb of the profit. Sounds delicious, right? In this guide, I'll break down the stock market so simply that even your dog could understand, though I wouldn't recommend letting Fido handle your portfolio. We'll dive into the basics, types of stocks, how to invest, and some pro tips to keep you from losing your shirt. Ready? Let's roll. First, let's demystify what a stock actually is. Think of stocks as magic beans. You plant them by buying shares, and if the company grows well, you'll have a beanstalk stretching to the heavens full of golden eggs. Okay, maybe not literally golden eggs, but you get the point. When you buy a stock, you're buying a piece of a company. If the company does well, your piece becomes more valuable. If they tank, well, your piece might not be worth much more than an old sock. But hey, every investment has its risks, right? Stocks are traded on stock exchanges, which are like giant farmers' markets for companies. You've got your big players like the New York Stock Exchange and NASDAQ. Companies list their stocks there, and investors like you and me can buy and sell them. Easy peasy, lemon squeezy. But remember, not all stocks are created equal. Some are like riding a roller coaster, others are more like a gentle merry-go-round. It's all about finding what suits your personality and risk tolerance. Now, let's get into the nitty-gritty types of stocks. Meet the two main contenders in the ring, common stock and preferred stock. Ding ding, let's get ready to rumble. Common stocks are the most, well, common. When you buy common stock, you get voting rights in the company. It's like having a say in the pizza toppings. You also get dividends, which are like little thank you notes with cash attached if the company decides to share profits. Preferred stocks, on the other hand, are like the VIP tickets. They don't usually come with voting rights, but they get dibs on dividends. If the company goes belly up, preferred stockholders get paid before the common folk. It's like being first in line at the ice cream truck. Choosing between common and preferred stock is like deciding between a sports car and a minivan. It depends on what you value more, the thrill of the ride or the comfort and security. So, when you're out there stock shopping, remember to weigh the pros and cons of each type. Your portfolio will thank you for it. Section 4. How to dive into the stock market pool without belly flopping. Ready to take the plunge? Investing in stocks is easier than you might think. First, you need a brokerage account. Think of it as your stock market passport. You can open one online with platforms like eAsterisk, Trade, Robinhood or TD Ameritrade. Once you've got your account, it's time to deposit some money. Start with an amount you're comfortable with, maybe the cost of a few fancy dinners. You don't need to be a millionaire to get started. Next, do your homework. Research companies you're interested in. Love coffee, check out Starbucks. Obsessed with gadgets, look into Apple. The key is to invest in businesses you understand and believe in. Finally, don't put all your eggs in one basket. Diversify your investments. Buy shares in different industries. This way, if one sector tanks, your entire portfolio doesn't go down with it. It's like having a backup plan for your backup plan. Section 5. Tips for the greenhorn investor. Avoiding the oopsies. All right, rookie, listen up. Investing in stocks can be a wild ride, but with a few smart tips, you'll be able to hang on and enjoy it. First tip, think long term. Stocks are like fine wine. They get better with age. Don't freak out over short-term dips. Second tip, avoid the herd mentality. Just because everyone is buying a particular stock doesn't mean you should too. Remember the dot-com bubble? Yeah, let's not repeat that. Third tip, keep your emotions in check. The stock market can be a roller coaster of emotions. Don't let fear or greed drive your decisions. Stick to your plan and stay cool as a cucumber. Lastly, keep learning. The stock market is constantly evolving. Stay informed by reading books, watching financial news, or following reliable stock market blogs. Knowledge is your best investment tool. Section 6. Parting wisdom, laughs, and lessons for the stock market newbie. As we wrap up this stock market crash course, remember this: investing is a marathon, not a sprint. It's about making smart decisions over time, not about getting rich overnight. And here's a motivational gem for you. The stock market is filled with individuals who know the price of everything but the value of nothing. Philip Fisher. So don't just focus on the price of stocks, understand their value. Investing can be fun and rewarding if you approach it with the right mindset. Stay curious, stay informed, and most importantly, stay patient. Who knows? You might just become the next stock market whiz kid. Happy investing.